Let's talk about something that doesn't always make the headlines, but it's quietly reshaping commercial real estate values: insurance. For years, insurance was just another line item. You renew your policy, pay the premium, and move on. But that's not the case anymore. Now insurance is one of the biggest challenges property owners face, and it's directly impacting property values. Here's what's happening. Insurance costs have been climbing steadily. Nationally, premiums have been rising about 8% per year since 2017. And in the last year alone, some markets have seen jumps of 20% or more. California, and especially Southern California, is feeling it even harder. Between wildfire risk, tighter underwriting standards, and major carriers pulling out of the state altogether, many owners are finding coverage not just more expensive, but harder to get at all. And here's the part a lot of people don't realize. Even properties that aren't near obvious high-risk zones are being hit. I've seen cases where premiums doubled, tripled, even went up 5 times higher than they were just a few years ago. Now think about what that does to cash flow. If your insurance premium suddenly jumps by hundreds or thousands of dollars per year, your net operating income takes a big hit. And when NOI goes down, so does your property value. Because lenders and buyers don't just look at the building, they look at the numbers behind it. So the $20 million asset you thought you had might appraise significantly lower just because of insurance costs. And this isn't just a theory. We're seeing it play out in markets like San Diego, Los Angeles, and Orange County, where tighter insurance markets are directly reducing deal valuations. So what can you do as an owner or an investor? First, start the renewal process early. Give yourself months, not weeks, to explore your options. Second, work with brokers who specialize in your property type. A generalist may not have access to the programs you need. Third, look into risk reduction upgrades. Things like fire suppression systems, roofing updates, or electrical upgrades can sometimes make your property more attractive to insurers. And finally, make sure you're underwriting conservatively. Don't assume insurance costs will stay flat. Factor in potential increases when you're analyzing deals. Here's the takeaway. Insurance is no longer just a box to check on your expense sheet. It's now one of the biggest variables that can impact your property's value. The investors who stay ahead of this by planning, protecting, and adjusting are the ones who will protect their balance sheet through market cycles. If you want to talk through how insurance trends are affecting properties here in San Diego or across Southern California, let's connect.